Hello, it's Adil Fazal here, marketanalyst.cfds.com. Please be sure to visit cfds.com for your trading needs. They are the specialists in spread betting and CFD brokerage. And alternatively, you can visit the educational site, which is www.cfdes.education. Okay, let's try and decipher exactly what's happening with these markets today. Interesting price action today, folks. Okay, so let's just bring up our summary of indices globally. You had the CAC finishing negative, you have the DAX finishing negative, you have the likes of the Euro stocks certainly negative, almost by 1%, the FTSE down by 0.6%, just under the 6400 level. So European markets certainly experiencing weakness. Now let's try and explain as to why that was the case. We had the Asian markets overnight. You had the Nikkei up almost barely up 0.7%. You had the Shanghai. Where is the Shanghai? We had the Hong Kong, obviously certainly lower overnight. You had the likes of the Shanghai up by 0.3% overall. Okay, so certainly a mixed picture in Asia. Overall, obviously, you are aware that it was a flat session, I'd say, with the exception of the Shanghai. Now, going into the European close, the bias certainly shifted very quickly. Now, given the fact that the US market certainly propelled higher, okay, given post the actual, obviously, Fed meeting minutes stating that December was a live meeting. Now, with regards to the actual FFR futures currently pricing in exactly 50% chance now of a Fed hike. Now, before, I think previously it dropped as low as 30% or lower. I think 24%. I've seen one poll. So, given the fact that the dovish expectations are now being dashed and eradicated, and the shift, as you can clearly see, is now moving towards a rate hike. Okay, so that's basically what we're observing at present. Okay, so. Okay, so you had the Shanghai, obviously the only outstanding level of strength. Okay, so basically we went into the European session. Just to recap, we went to the European session. I got disturbed there with my little daughter walking in. Okay, so with regards to the European session, we had Shell earnings certainly weaker than expected. Deutsche Bank cutting its dividend and obviously weaker than expected. We had Alcatel weaker than expected. We had Sanofi weaker than expected. We had Schneider, BT earnings missing, Barclays missing. So overwhelmingly there was a risk-off scenario. Okay. Now we also had the German CPI higher than expected, so that obviously kills the QE argument going into December. We've already had anti-QE rhetoric already from several ECB officials. Pending home sales in the US in the afternoon, certainly weaker than expected. US consumption data certainly weaker than expected. You had UK CBI data certainly weaker than expected. So that was against, you had some economic data out of the Eurozone which was slightly better than expected in terms of confidence, etc. And Total earnings were better, Lufthansa earnings were better. Although Shanghai, Nikkei are barely flat, nothing substantial. You've had oil prices moving lower ever since and putting in a potential top. Copper is certainly moving lower. The dollar obviously strengthening to a large extent. And given the fact that the expectations of the Fed were maintaining its dovishness, etc., is no longer the case. Now, if you add all these variables together, there's an overwhelming amount of evidence towards a bearish bias. Okay, so my bias has been bearish. I am already swing short on the FTSE from 6445, and I'm expecting sub 6300, potentially 6200 on the FTSE, given the fact that the Fed has left the probability of a hike in December, and the markets certainly have gone ahead of themselves. Okay, that's my interpretation and understanding thus far. Looking at the Shanghai index as well, you cannot see strength. Ever since the Chinese have cut rates on last Friday, the index has failed to propel higher. Okay, certainly has failed to propel higher. Also with regards to Nikkei, we're failing to close above that 200 MA. There certainly is no bias or argument that you can close that above. So from my perspective, especially with regards to the S&P 500 as well on the weekly chart, yes, there is an argument that we could certainly propel higher, and there is certainly more of a move to go on the upside. But given the fact that we've had this stellar move higher, it certainly seems to be exhausted from my understanding. Okay, the daily chart itself, no real horizontal resistance or zone that you can certainly pinpoint here and say, okay, yes, this is going to break. It's very hard to actually envisage that happening. We have had a break above, we had a fake out, we dipped below, we've dipped higher again, and now this move higher really does not have any legs or any real fundamental strength behind it, from my understanding anyway. Okay, my understanding states that this move here is going to be very vulnerable and may well fail. Okay, so again, the market is king. The market will dictate which way it wants to go, but from my understanding, it certainly is the argument is getting weaker and weaker for it to move higher. Now the 10-minute chart, as you can see here, there's no real economic data that tells me that the S&P 500 is going to crack this gap fill resistance, which we can see here at 2090, and move higher substantially. I just cannot see it at this very juncture. Okay, now the S&P did move off the pivot low at 2082 as a dip bias came in, especially given the fact that we had a dip buyer here at 2066, which was gap fill. Okay, so again, we're going to watch that potential support zone. So can we actually move higher? It's very hard at this current juncture. Very, very hard at this current juncture to move higher. I cannot envisage the move itself. Okay, so it's going to be very, very hard. Okay, very, very hard at this current juncture. So I'm expecting a thrust lower on the S&P 500 at this point. I am expecting a move here, here, and here. Pivot low 2082 potentially gets tested, and we'll see exactly how the market reacts thereafter. Okay, now going into European indices, as you know, the overwhelming data itself was negative, etc., etc. So let's see how this is playing out in the actual technical sphere. Now, daily chart of the S&P, or should I say the Euro Stoxx 50, you can see it's struggling to move higher. I did expect a thrust down of 200 MA, and I was long the Euro Stoxx from the 300-400 level, and it failed to transpire, and therefore I've closed subsequently, and I am looking for a potential move lower. So that certainly is a scenario that I find myself in at present. Okay, so the 60-minute chart, or should we say 60-minute chart of the Euro Stoxx itself, we failed to move higher. You can see that we've clearly put in a lower high. Now that's on the back of obviously higher inflation expectations as well. The fact that the Fed is going to hike in December certainly potentially has been factored into a large extent as well, given the fact that the dollar is into resistance now, and that doesn't bode well for the European markets. Now, even with the euro moving higher, the European markets were still moving higher, so there is some sort of disconnect at present. So again, one needs to remain open and privy to that. So if I look at the daily chart of the dollar, you can see here we are obviously currently into resistance, so that means the euro must certainly be into support. Now remember, euro is not going to just rely on the dollar itself, it's going to rely on risk, and risk is on the upside in terms of the euro moving higher, because you have a risk off scenario, which means that the QE trade gets reversed, euro higher, and obviously equities lower. If I just bring up a chart of the euro USD, I'll be able to show you. Here we go. Okay, so we certainly seem to be making some type of base. We did get a flush here at the 1.1050 level. That was on the 28th. Okay, yesterday, given the fact that the Fed was going to hike, etc. And we certainly seem to be consolidating thus far. So again, very, very interesting scenario going forward. Okay, now all about dollar strength at this juncture. Okay, now let's move on to the German DAX now. German DAX is holding that gap level of resistance. It's failing to move or propel higher. 60-minute chart, you can clearly see you have a double top formation. Double top generally means a lower high is expected thereafter. And don't be surprised to certainly see one, given the fact that we have an unfilled gap below. Especially given the fact that the economic data out the Eurozone in terms of earnings certainly has been weak. And Deutsche Bank cutting its actual dividend. Again, these are all factors for the bearish side. Excuse me, I'm very tired today. Okay, so now we are looking at a potential H&S formation as well, given the fact that we've made a double top on the 60-minute chart, and we are looking at further weakness below. Okay, so lower lows, lower highs certainly resumes, and certainly remains a game that's in play. Okay, so you have this left shoulder here, you've got this head, you're moving lower, you have this right shoulder, and then obviously the market's flushing on the downside. That's what I am expecting. Now you do have pivot support on the DAX at 10,690, obviously 10,660. You have support here at this gap level, and then obviously ultimate gap fill. Now it's going to be very important to see the gap close on the downside, and that will be based on the Nasdaq weakness as well. Okay, so H&S formation certainly in play, and we are in this bearish channel. Okay, now let's cross-reference the this movement now with the CAC. And the French CAC itself, daily chart, you can see we are still consolidating within there. You have this inverted head and shoulders formation, so that certainly needs to be respected. But you do have an unfilled gap below that certainly needs to close as well. Now the 60-minute chart, yes, we have held this key support level at 48.50 on the CAC. So we are respecting that from a trading perspective. Now you have this diagonal trend line, so you are potentially still looking at a lower high, but you haven't made a lower low yet. So again, that's going to be interesting whether or not we can close that gap on the downside. The 10-minute chart, the 4840 level certainly has acted as a rock, which is obviously gap fill support as well to a large extent. This level here at 4840, and obviously the market has propelled thereafter. Now you do have the unfilled gap at 4800 that certainly needs to close on the downside, so one needs to remain vigilant of that. Okay, now the FTSE 100, let's just move to the daily chart of the FTSE 100. Now the daily chart, we did have an inside bar on yesterday's candle, and you did see some strength or buying strength certainly coming in, but this rising contracting wedge pattern certainly remains vulnerable from my understanding. Now the 60-minute chart, you can see our H&S formation, which is very similar to the German DAX, given the fact that you've had weak earnings, Shell, and obviously BT and Barclays as well. So certainly a barrage of weak earnings. Now you are seeing the chart of copper certainly making a new low as we speak. So again, that's another factor certainly needs to be considered. As you can see, the 10-minute chart certainly is lackluster and certainly potentially moving lower. And the 4-hour chart certainly shows you that you have a H&S formation in play. And given the fact that you had weak earnings today, and given the fact that you also had weak GDP out of the US and weak consumption data as well, it certainly does not bode well. Now, pending home sales were weak as well. So everything is indicating lower. It's very hard for me to make an argument on the upside at this current juncture. Okay, so I think that's a summation of the European markets in total with regards to the FTSE. Now the actual volatility index, just before I finish, the volatility index certainly is putting in potential dojis and making a potential base. As you can see here on the 60-minute chart, you are making a base now, and we are looking at potential inverted head and shoulders playing out here as well. So this is going to be very interesting as whether or not we can make a higher lower, then obviously the actual volatility certainly pick up. The French CAC as well, you can certainly see here in the daily chart, certainly are starting to put in potential support. We are making a higher low here as well. We've not made a lower low, and therefore we are looking for a potential thrust higher in terms of risk, especially with the inflation data coming out on the positive side. Okay, folks, I think that's a wrap with regards to European markets. Be sure to visit cfdes.com for your trading needs. Goodbye now.